Brookfield Corporation is the largest position in my portfolio, and yesterday it reported its third quarter earnings results. The stock initially saw a pretty good bump, but today it seems like the stock is now selling back down. I took the time to go through the earnings report, and I found all of the highlights that investors need to know. In this video, I will be sharing everything that I found with you. Additionally, my Patreon members have already received my thoughts on Brookfield's Q3 earnings and what I am doing with my own position. It is much faster to send out my research and my thoughts in text rather than making a video, so they get all of the information before YouTube does. So if you would like to come and join my Patreon, then you can do so via the link in the description. And by doing so, you will also be helping to support my channel. But with that being said, let's now dive into Brookfield's third quarter earnings results. So right away, let's take a look at the highlights from the earnings results. And right here, we can now see that distributable earnings were $5 billion in the trailing 12 months. And distributable earnings is the company's best metric to follow, as it is what the company believes its free cash flow is. Liquidity is also now at $120 billion today. And the president says, as always, our focus remains on creating long-term wealth for all stakeholders. Distributable earnings before realizations on their investments increased by 11% per share over the past 12 months as well. So free cash flow is up by about 11% on a per share basis year over year. Moving on to the operational highlights, we can see that total distributable earnings for the quarter was $1.2 billion, and again it was $5 billion in the trailing 12 months. Now for their asset management business, distributable earnings were $634 million in the quarter and about $2.6 billion over the last 12 months now. The asset management business also closed its largest ever private equity fund in the quarter and the world's largest ever private infrastructure debt after the quarter ended. So they are raising a record amount of cash right now, and they are also successfully closing the largest funds in the world, which I think is pretty impressive. Now, moving on to the insurance solutions, we can see that distributable operating earnings were $182 million for the quarter and $657 million over the trailing 12 months, which is an increase of 14% year over year. Brookfield also says that the insurance business is now on track to reach around $800 million of annualized earnings by the end of 2023, which is about $200 million of quarterly earnings. So the insurance business is still growing. Additionally, Brookfield believes that the insurance business can grow to $2 billion in annual earnings over time. And during their Investor Day presentation, they said that it should hit around $2 billion in annual earnings around the year 2026. Now moving on to the operating businesses. This is Brookfield Infrastructure, Brookfield Renewable, Brookfield Property, and Brookfield Business Partners. Distributable earnings from the operating businesses were $366 million for the quarter and $1.5 billion over the last 12 months. Distributable earnings from the renewables and infrastructure business also increased by 14% over the trailing 12 months, and these businesses are in fact still growing quite well. Brookfield also says that there was strong performance within its core real estate portfolio and drove same-store net operating growth of 9% year over year. So it seems like their core real estate portfolio is still performing well. Moving on to some realizations and business sales. Brookfield says that it has executed on approximately $25 billion of asset sales so far year to date. It also says that substantially all of its transactions were done at higher than the IFRS carrying values, providing strong evidence for the carrying values of our high-quality investments. This suggests that Brookfield's assets are worth more than their carrying values on their balance sheet, which does dispel one of the main bearish points or concerns that I have seen from public investors. A lot of people do not believe that Brookfield's assets are worth what they say they are worth on the balance sheet. However, whenever Brookfield goes and sells off some of its assets to raise some more money or do its capital recycling program, it tends to sell those assets at even higher values than they are reporting on their balance sheet. So rather than their assets being worth less than they are reporting, typically they are actually worth more, which is very interesting. Now moving on, Brookfield says total accumulated unrealized carried interest now stands at $10 billion, representing an increase of 12% year over year, net of carried interest in realized. Then they also say, since the end of last quarter, we returned over $400 million to shareholders through regular dividends and share repurchases. Over the trailing 12 months, we have now repurchased approximately $750 million of Class A shares in the open market. And in the third quarter alone, they repurchased $300 million worth of shares. So as Brookfield's price is not going up, but the fundamentals of the business continue increasing, they are allocating more of their own capital to buying back shares and returning cash to shareholders that way. Now, moving on through the report, this right here shows the different operating segments and their different earnings that they produced. We can see right at the top that the asset management business brought in less earnings due to the Brookfield Asset Management spinoff. Brookfield Corporation, which is the ticker symbol BN, now owns 75% of the asset manager, whereas last year they owned all of it. They owned 100% of it. If Brookfield Corporation, or BN, still owned all of Brookfield Asset Management, then earnings would have grown to over $800 million in the quarter, and roughly $3.5 billion in the last 12 months. So Brookfield Asset Management is still growing. It's just that there is less of Brookfield Asset Management going towards Brookfield Corporation's earnings this quarter. The insurance business is also still growing strong and produced a record amount of earnings of that $182 million. Now, one of the more bearish points right here out of the entire report is that Brookfield Properties segment is seeing FFO continue to decline. It was $179 million this quarter, whereas last year for the third quarter, it was $191 million. In the trailing 12 months, it is also sitting at $766 million, which is down roughly $120 million year over year. So Brookfield Property Group is still seeing its profitability go down. And Brookfield's real estate portfolio is still acting as a headwind on the company's overall profitability growth. Now, down at the bottom here, we can see that realized carried interest was $750 million in the trailing 12 months. So Brookfield is starting to realize gains on its investments, and its realization gains on its investments are starting to go up. And overall, distributable earnings were $5 billion in the trailing 12 months, even after they factored in the Brookfield Asset Management spinoff, which I do think is a lot of cash flow that this business is still generating. But let's now move on to Brookfield's earnings slides. And this is the performance highlights, and I highlighted the boxes to show where Brookfield Corporation's distributable earnings adjusted for the BAM spinoff are and how they have been over the past year. So for example, we can see that distributable earnings from the actual business, its operations, are up year over year from 2022. Again, when we do factor in the Brookfield Asset Management spinoff and adjust for it. So the business is still growing, and its operations distributable earnings did grow by 11% year over year. Now, on a per share basis, you can also see that it is up. So the business's profitability is in fact still growing. And as a shareholder, I do like to see this. You can also see how rapidly the business's profitability has been growing since 2019. Now let's move on to Brookfield's annualized cash flow from its different segments and all of its different carrying values of all of its investments. This is a pretty intimidating photo right here, so let's try and break it down into its segments and go through it in as simple of a way as we possibly can. So first, we are going to focus on the annualized cash flow column here. And we can see that the asset management business now does about $2.5 billion in annualized cash flow. Insurance is doing around $775 million, and the operating businesses are doing about $1.4 billion. This means that total annualized cash flow is now roughly $4.6 billion. Brookfield also believes that its net asset value per share is now $73.68 per share US. Its ownership of Brookfield Asset Management is valued at $41 billion. And by the way, this is its valuation based on the publicly quoted shares of Brookfield Asset Management. So again, this is worth about $41 billion. Carried interest is now worth about $26 billion, and accumulated interest or profits is up to $6 billion. Brookfield also has $12 billion of direct investments. Its insurance solutions are now worth roughly $11 billion. Operating businesses are worth $40 billion, and the company has debt of $17.3 billion. So its net asset value is $118 billion, or about $73 per share. And this right here is why Brookfield Corporation believes that its stock is undervalued. It's trading for less than half what they believe their net asset value per share currently is. This next image is the company's annualized free cash flow over the past 5 years. And we can see that in 2019, the company was producing about $1.7 billion, and today it is now producing about $4.6 billion in annual free cash flow. This is a significant amount of annualized free cash flow growth for the business. This next slide shows us Brookfield's annualized target carried interest, and we can now see that it is about $5.7 billion, which is up from $4.6 billion year over year. This is basically the profits Brookfield Corporation is sitting on within its own invested funds. So if it wanted to, it could sell these funds and generate $5.7 billion of profits right now. Brookfield Corporation will continue to realize these profits over time though, just like it realized $750 million of profits in the trailing 12 months. This is real profits and value for shareholders, and over time, Brookfield's target carried interest should continue to grow and be converted into real cash for shareholders. Now let's move on to Brookfield's letter to shareholders, which is written by the CEO, Bruce Flatt. And here it says, with nearly $120 billion of deployable capital, we are in a very strong position. At the corporation, in addition to holding $4 billion in cash and financial assets, we have liquid securities of a further $60 billion on our balance sheet, and another $50 billion of insurance float, which will soon be $100 billion. We also have the ability to raise additional capital through public debt offerings in the capital markets with significant headroom in our current credit ratings, not to mention the approximately $5 billion of distributable earnings we receive annually. As a result, we are well prepared to withstand any adverse cycle and, most importantly, are able to focus on growth at a time when we believe excellent value investment opportunities are coming in 2024. This should see us emerge from the cycle in an even stronger position. So Brookfield is basically saying that the company has a lot of liquidity and it plans on continuing to acquire businesses and investing all of this capital while there are attractive investment opportunities out there. Bruce is saying that the business is able to take advantage of these opportunities as they do arise, as the company is well funded and is able to handle any drawdown. Also, producing $5 billion in annual cash flow really helps out the business. Now, this next screenshot talks about Brookfield's non-recourse debt and how it structures its debt. So this says, we take a bottom-up approach to financing the investments we own. This means that the vast majority of our debt is at the individual asset or portfolio company level and is sized appropriately for that specific investment to be sustained through a cycle. Each loan has recourse only to the specific asset that it finances, and importantly, gives lenders no recourse to BN, BAM, or any perpetual affiliate balance sheets. Our approach to leverage has been designed to optimize our capital structure and insulate the corporation and our broader business from issues at specific assets that may arise from time to time. This has stood the test of time over the past 30 years, including during periods of stress far greater than what the markets are seeing today. So Brookfield is basically saying that every single one of its assets has its own debt, and that debt is only recourse to that one asset. So if one asset goes under or cannot afford its debt anymore, it cannot spread throughout the entire business or over into Brookfield Corporation. This is a way that the company insulates its debt and makes sure that its debt cannot become a massive problem. Brookfield has been structuring its debt like this over the past 30 years, and their business has stood the test of time, including periods that are worse than what they believe we are in today. Overall, the company is basically saying that their debt position should be fine and that the business is not at any real significant debt risk. Moving on, Bruce writes, we remain well positioned in the current environment. Our plan is to grow distributable earnings and intrinsic value by 20% plus on a compounded annual basis over the next 5 years. Your entry point today could lead to even better returns, as you can acquire shares at a cheaper price than their current intrinsic value. So Bruce is reaffirming Brookfield's 20% annual projected growth over the next 5 years, and he believes that the stock could yield more than 20% annually due to it selling below its own fair value, or what he believes the fair value of the business is. Then lastly, Bruce writes, the primary objective of the company continues to be generating increased cash flows on a per share basis, and as a result, higher intrinsic value per share over the longer term. In the Brookfield transcript, they also announced that in Q4, they have started buying more shares of Brookfield Infrastructure and Brookfield Renewables, as they believe these stocks are now undervalued as well. So their ownership positions in these businesses is continuing to go up. And personally, I am happy about this because I too was buying Brookfield Infrastructure shares recently. They were offering an over 7% dividend yield while also projecting to grow the dividend by 5 to 9% annually. I simply thought that it got to a point where it was a very high risk reward opportunity, and it looks like the management over at Brookfield Corporation agreed. This shows me that Brookfield's management is focused on deploying capital into investments only when they offer a high risk reward. Brookfield Corporation waited until BEP and BIP were very cheap to allocate more capital towards them, and I think that this was a good move. This also means that Brookfield Corporation is now receiving more income from these businesses' dividends as well. Again, BIP shares were recently offering 7%, so Brookfield Corporation's capital invested is also now earning 7% and should grow with BIP. But lastly, let's head over to Stock Unlock's discounted cash flow calculator to see what the market is currently pricing in for Brookfield Corporation over the next 5 years. And here we can see that the market is currently pricing in annual free cash flow growth of about 9.6%, for Brookfield to buy back about 1% of their shares annually, and to trade at an 11 price ratio, which is around what the company is currently trading for. And if the company can hit these metrics, then its fair value is about what it is trading for today, about $32 per share. So now what I do is ask myself if I believe that these metrics right here are too pessimistic, because if they are, then it means that the market is currently pricing in pretty pessimistic numbers that could hopefully be beat and offer additional outstanding returns in the future. So right away, Brookfield themselves say that they believe they can grow free cash flow over the next 5 years at an annual rate of 20%. This immediately brings up the fair value of the business to about $50 per share. Now, additionally, if Brookfield's price ratios do expand, because personally I do believe that they are quite low right now, they're actually near historical lows. So if the price ratio does expand even up to 15, then that means that the fair value for the business is actually about $68 per share, or 100% above where the stock is currently trading. Additionally, the shares could offer a compounded annual growth rate of 28.2% if Brookfield Corporation does meet its own projections, and if the price ratio does expand back to what it has traded at historically. And this right here is why I think that Brookfield Corporation is selling for a margin of safety today, and why it is my largest position. One, because the company is projecting substantial growth over the next 5 years, and they have a history of meeting and exceeding their own projections. If you go back and take a look at the company's historical investor presentations, basically every single time they put out a projection, they end up beating it. So they have a strong track record of producing these incredible projections and then beating them. Now, on top of this free cash flow growth that the business is projecting, I also think that its price ratios could expand over the next 5 years as the market starts to see, well, hey, this company is actually executing quite well. Let's simply value it how we have historically, because right now the market is quite bearish towards Brookfield Corporation. So this combination of price ratio expansion plus fundamental growth could offer some pretty incredible returns over the next 5 years. Again, if Brookfield can actually execute and if the market does want to expand the price ratios as it has historically. So that is my personal thesis on Brookfield Corporation, and that is why I think that it is undervalued today. And again, why it is my largest position. Now, Brookfield Corporation is also the largest position in my portfolio by a substantial amount right now. So I'm not really looking to continue adding more shares because the position is where I want it. It's already very large for me, and it's about where I'm comfortable with it being. I would only really continue adding to this position if the shares remained in this price range and I continued earning more money, because I like to dollar cost average in my portfolio. So every time I get money, I buy stocks in my portfolio. So over the next year, if Brookfield does stay in this range, then I could see myself nibbling some more shares on it, or if the stock continues to sell off even lower. If the stock went down to about $30 Canadian or something like that, I would not be able to help myself and I would buy some more. But again, the position is already quite large, so it's not one that I am actively looking on continuing to add to going forward. I would probably rather add to other positions before Brookfield Corporation right now. But that is my thoughts on Brookfield Corporation and its third quarter earnings results. Overall, I thought it was a pretty solid quarter. The company is continuing to execute. They maintain their own guidance and they believe that the stock is still undervalued. And again, if you want to receive my thoughts on businesses' earnings before I make YouTube videos, then you can join my Patreon. You will also get access to my Discord, some stock analysis that I do not share here with YouTube, and you will also get all of my buys and sells. So if that does interest you, then again, consider joining my Patreon. And by doing so, you will also be helping out the channel. But with that being said, thank you all again so much for watching. I truly do appreciate it. And I really hope to see you all again in my next video.